What's the vibes, guys? How you guys doing? Welcome to another YouTube video. And this is a price action video where I'm going to be walking you through valid order blocks, right? So you might have, been trading order blocks and probably wondered why sometimes your order block doesn't work, and maybe you've given back money to the markets based on that. Today, I'm going to just be walking you through 5 point checklist that you can use to validate and have a high probability order block. Now, if you follow this checklist, one of the things that will happen is you would stop taking losses on order blocks. You have order blocks that you see and you just discard, right? If you've studied order block, which I think you might probably have, you'd see that many times there are a plethora of order blocks, spread out in the marketplace. So you see, it gets down to the idea where, oh, which of the other blocks do I use? Right. So we're going to be looking at it. Let's get right into the video. What is an order block, right? An order block, this is a bullish or bearish candle that precedes the expansion in the corresponding direction. So it is a down close candle that precedes, right, a bullish expansion, or an up close candle that precedes, right, a bearish expansion. It's a price zone defined by the last opposing candles before an impulsive move that breaks structure and leaves an imbalance, right? We'll look at this later. It marks where major accumulation and distribution likely occurred and where mitigation and redistribution of funds happen. Now, this is the later part where we're going to be dialing in. The first part talks about it. The order block is really telling you that right in here is where we had the max orders for buy side to occur. You'd have heard the term your banks buying down close candles and they selling up close candles, right? And that's really what it means. If you're going to be profitable trading the marketplace, one of the things you're going to be doing is you want to be engaging price for buys at discount. You want to be engaging price for sales at premium. And it's because the expansion phase is not where the orders were invested, right? This distribution phase for buy side, this is not where the orders were invested, right? The down close candles or inside of that accumulation phase is where the orders were invested for buy side. So this is just a result of what happened down here. We're going to get into it. Why are the order blocks important, right? The order block provides insights into key levels where significant distribution occurred and where redistribution is likely. So the order block, again, just like I've explained, it's that point that gives you an insight to, oh, what is happening inside of here was being dealt with here, right? The expansion phase, the distribution phase for buy side that we see inside of here is as a result of the transaction that was done inside of the down close candle. The banks will buy in down close candles, right? And in another video, I'm going to be sharing you or opening up to you how the curve of the market actually works. So we'll look at the commercials and how those distribution phases buy, because what is really happening on the other side before buy side inside of here is the market makers are buying up all of the sell positions inside of the market, and the moment all of those sell positions are being bought up, price starts to move higher. So it is not as a result of more buyers coming into the marketplace that price keeps going higher. It is really that all of the sell orders are being bought up, right? And price then starts to go higher. I don't want to confuse you. We are looking at order blocks. I want to teach you really, really very simple things that you can really apply as you get into the market this week. How order blocks, or the valid order blocks that are in the marketplace so that you can really choose them. Now, so the first thing that you want to know is the order block has three reference levels, right? The first one is the high, right? So the weak high, right? If this is a bullish order block, right? The weak high is called the high of the candle, right? The open of the candle is just the bodies of the candles where it start out. So open, high, low, close, right? So this is the open and a mean threshold. Now, why I like to talk about this is there's a question that comes to me a lot, when order block is being talked about, and it is, can can an order block be used twice? Right. And the truth is, yes, the order block can be used twice. And one of the reasons for that is the order block price can really just come to touch its high in here and expand higher, then return back into the open inside of here and return higher, and then return back into the mean threshold and return higher. So it could come in three times, right? So you want to watch for this level. So it could come into the higher and the open and return higher. All right. And at a later time, return back into the mean threshold and you see price going higher, wondering, oh, should price not disrespect the order block? No. If the context of price is still in that directional bias, right, we would see price use multiple, or price could actually use, the order block multiple times, right? So now let's get into the real deal of what we're looking at. The 5 point checklist for choosing a high probability order block. The first thing you want to think about is, and anytime you're thinking about any any model, one of the things you want to think about is the bias. If the bias is wrong, what is going to happen is you're going to pick the wrong order blocks, right? Because when price is poised to move higher, everything set in terms of bearish reference points, those things would be disrespected. So your bearish order blocks would fail when price is poised to go higher. When the directional bias is bullish, right? Price is going to disrespect bearish order blocks, bearish fair value gaps, bearish whatever. It's going to just take it out. So the first thing you want to really pay attention before going into looking for this reference point or for this PDRAs, right? Or whatever you have in terms of entry protocols, the first thing you want to think about is I don't want to just go and look for order blocks in the marketplace. I want to think about what is the bias. Is price bullish or bearish? I want to first go into the higher time frame and figure out, oh, what's the bias for the day? What do I think the next daily candle is going to print as? What do I think the next weekly candle is going to print as? And until I know that, I do not think about any entry protocols. I do not think about order blocks. So every entry protocol fails when it's against the directional order flow or bias. Decide directional bias before hunting for an order block. So it's the first thing we want to think about. We need to know the context of why we want to think about order blocks, because if we just go in looking for order blocks, we could choose a bearish order block and price is bullish. And what we would see is price is just going to move past the order block and disrespect. So it's the first thing you want to think about. The second thing is when price gets into the order block, you're thinking about a displacement. So we're going to talk about two things inside of here. A displacement. So what is a displacement? A displacement is the quick movement away from a particular level. So when we see an order block, obviously we need to see a displacement, because without a displacement, we don't even terminate another block. And this is one of the ways you are going to separate low probability order blocks to high probability order blocks, because some people would mark out order blocks and there's no displacement. We don't have multiple candles that is moving away from this candle. Now it could even be one candle, but I want to see that candle large and bold, because it needs to be displaced from that candle. It needs to engulf this candle. So for my framework, I like to use 2-3 candles that expand away from here, that expand away from that candle, as you can see inside of here. Right now, when it's a displacement, there's one thing that is very, very common with displacements, which is fair value gaps. Right. So you would see that even in my example here, I think you'd see that that's a fair value gap. Right. A fair value gap can be denoted by 3 candle formations: candle 1, candle 2, candle 3. So it is the high of candle 1 to the low of candle 3. Right? It's an imbalance. And one of the things we know about price is price would always return back into imbalance levels or inefficiencies, right? And that's a video for another time. But one of the things you want to pay attention to is you want to see a displacement from the order block, right? And if that displacement breaks market structure, that is another advantage. That is exactly the type of order blocks I'm thinking about. Because if you think about another block is a continuation play, meaning that another block is telling you that a directional bias or a direction has already been in play. Right? If I'm looking at a bullish order block, it means that price are already expanded higher, right? And I'm only looking for a return into that bullish order block for continuation of bullish prices. So it's a continuation play. So if the first expansion that happens away from the order block, you have to see this before you already tag an order block, because what you're going to be trading is price returning back into this level, and you're then going to be buying when price is returning back into this level at a later time to go higher. We'll see examples. So this expansion, right, I want to see it break market structure. And what I really mean by that is I want to see this expansion close above an old high. So if this expansion closes above an old high, that is now the type of order blocks I want to pay attention to. I want to see it have a fair value gap. That's another thing I want to see with valid order blocks. Right? Let's go back inside of here. All right. So I want to see breaking market structure, and I want to see an imbalance inside of that expansion. So that first expansion, there are two things I'm expecting from it, right? I want to see displacement where a fair value gap is going to be inside of that, right? And I want to see a breaking market structure, right? So you can see an expansion and doesn't break market structure. That brings that order block to what? Low probability. We're going to see examples. So the third thing, key levels and reference points. Only trade order blocks from key levels. Example, fair value gaps. Now, what do I mean, right? I'm only going to trade my fair value gaps, or I'm going to trade my order blocks from key levels. Now, there are 4 key levels to think about. Old highs, 1. Old lows, 2. The blocks, right? Then that could be, a bearish block, a bearish breaker, a bullish breaker, a proportion block, an order block. Those are key levels, right? And the last one is fair value gaps. For order blocks, I like to use fair value gaps. So I want to see price already deep into a fair value gap, then form an order block, and that order block is a valid order block to me. And the way I like to say it is an order block from a fair value gap, an order block from a valid fair value gap is a valid order block. Right? We're going to see examples, right? We're going to see examples, but I want to just run through this checklist so that you know what I'm saying. Right? Premiums and discount. Number 4. Now, for premiums and discount, this is what you want to think about every single time you are trying to trade. Like I said earlier when we started this video, when you're thinking about buying anything, you want to buy in discount. Right? When you're thinking about selling anything, you want to sell in premium. And that's how you should approach the markets, because the guy that buys in the deeper discounts is the guy that makes money on the move. Let's say we're thinking about, equal entry, let's say we're thinking about equal entry numbers. We're going in with the same amount of money, we're going in the same amount of pips, right? If I'm buying at a lower level than you are buying, then I'm going to be making money on that buy move, even if we close at the same point. So you make more money when you buy at discount. So I want to think about the order blocks that are the extreme ends of a range. I don't want to buy the order blocks that is in the midpoint of the range. I want to buy the order blocks that are in the extreme part of the range, right? So if you think about it like this, right? If there's an order block inside of here, I'll show you examples as we go. If there's an order block inside of here and there's an order block here, I don't want to be buying this order block here. I want to wait for price to come right down into the order block that is right at the extreme part of the range. And that's where I will be engaging, for buys, right? And same thing for premium. I want to be buying order blocks that are what are the extreme part of the range and the premium part of the range. That's what I want to be engaging for sales. So prioritize order blocks in the premium and discount zones. Disregard order blocks formed within the range equilibrium. Right, and now the last one is called offset accumulation. So there's actually an entry protocol which I'm going to teach you today. Stick around if you're going to see that. Right, and for offset accumulation, it's really just waiting for price to run out sell side liquidity and old low into a bullish order block, right? Or an old high into a bearish order block. It could also be equal lows into a bullish order block, right? Or equal highs into a bearish order block. Now, when you wait for scenarios like this to pan out, right, you see your order block move very, very sweetly. As you can see, they are very, very simple checklists, and we're going to get into price. I think I have 2 examples here, and I'll go into price and show you more examples, and we're going to be done here. All right, let's look at this, right? So this is the first example. Now, like I said you want to think about order blocks that come from a valid fair value gap. So from the first example we said, or from the first checkpoint, let's start from there. What is the bias? What is the bias? And that's the first thing you want to think about. What has price been doing? For bias, you want to think about very simple things like what has the market been doing, right? Simple market structure, simple market structure will let you know that for buy side, you're thinking about higher highs, higher lows. Right, for sell side, you're thinking about lower highs, lower lows. So when you get on the higher time frame, that's the first thing you're thinking about. As price being forming higher highs and higher lows. Can you see that? If you look at this, this is a low, this is a high, this is a lower low, this is a higher high, this is a lower low. So higher highs, higher lows, right? So these higher highs, higher lows, this is a bullish market structure. So we know that now the market structure is bullish. That's the first thing, right? So we're confirmed that, oh, okay, price is bullish, so we can look for bullish order blocks, right? The next thing we want to think about is a displacement. So if I'm going to be trading this order block, can I find a displacement? Displacement is I want to see candles like we talked about earlier. I want to see multiple candles, 1, 2, 3, that engulfs the bullish order block, right? We already said this is a bullish order block, as you can see it is, right? It has a fair value gap. The displacement should have a fair value gap, right? That expansion inside of here, these consecutive candles that print up inside of here, I'm looking at that have what? I'm looking at that have what? A fair value gap inside of it, right? So that is confirmed, right? The next thing we want to think about is only trade fair order blocks from key levels. So this is one of my favorite. This is one I want you to really, really pay attention to. Right, as you can see, yes, this is an order block, but the reason why I'm buying this order block, and if you've been following the Telegram, you see, we called all of this out week by week, week by week, week by week, and we talked about all of these things. Right, the reason why this order block is very, very interesting to be traded is look at where it's coming from. A valid imbalance, a valid fair value gap. Now you'll be wondering why you calling it a valid fair value gap. It's just a fair value gap. But a valid fair value gap is a fair value gap that when dipped into, price expands, price shows consecutive candles moving in a direction. The distribution phase comes in when price, so you can see that movement, right? And why it is key is when you look to the left side of the chart, you start to see bearish protocols start getting disrespected. So this is a valid bullish fair value gap because it is supporting price going higher. Right, we're seeing price lose bearish order blocks, like you can see, because price is bullish. We would see bearish order blocks gets missed. We'll see bearish fair value get missed. We'll see anything bearish gets missed. That's why the first thing that we talked about to look for is the context, the bias. What is the bias? So now this is a bullish fair value gap, right? Oh, sorry, a bullish order block. And now we can see that it's coming from a support level. The support level in this case is the imbalance, the fair value gap. Right, so that also is check. It looks like a whole lot of checklist, but if you can have if you can have 2 to 3 of this checklist inside of your order blocks, then your game. Many times you find 4 or 5 of them already inside of it, right? And we have premium and discounts. You want to trade the order blocks in discount levels, right? In discount levels. And this example really doesn't show that, but maybe we would see that. But if you look at it, if you pull up your fib from low to high inside of here, you see that price is below the 50% level. That's where your order block is. That's what you want to be trading. That's what you want to be trading. And you would see examples where you find that the order block is in premium level and you're trying to buy it. And that's why you see order blocks of such sort, you see them fail. Like somebody might be looking at this down close candle because this is an expansion that covers this high. Could be looking at that as a bullish order block, but what happens? That order block gives way. It fails because you want to be trading order blocks, right, at the discount level of the range. All right, and finally, offset accumulation. We want to see price run out prior liquidity, or want to see price run out, old lows, very, very simply put, right, before it gets into the order block. So this is a checklist that I don't like to miss. If I'm going to be buying this, the price just take out an old low, because what is really happening when price takes out an old low here is a transaction is being made. The market is for buyers and sellers, and that transaction happens constantly. So when you see an old low, what is below an old low? Sell side liquidity, sell stops. The sell stops are being paired with the market makers buy orders for buys or for longs in the marketplace. So when I see that transactional value happening, that is a confirmation to buy side, right? So in this case, price is running out equal lows, which is also a very, very good example, and also a very, very good checklist to think about. Prices running out equal lows into an order block suite, right? You want to be buying this, right? That's an order block. Now, if we just go ahead, which I did not really mark out, but you can see it here, you would see that down close candle, price expands. Now, this is just one candle expanding above the high, but does it break market structure? Yes. When you're thinking about breaking market structure, you're thinking about a close above previous high. You're not thinking about just a week taking about this high, but thinking about a close above it. So this is a displacement. Now it's also a displacement because we have what? We have the fair value gap inside of there, right? So you'd see that we have fair value gap inside of here. So is this a valid order block? Yes, it is. Yes, this is a valid order block, right? That's your valid order block. Breaks market structure, has a fair value gap, right? And it's happening in the discount part of the range. Low, high, prices returning back into discount. So you can see, yes, this is a bullish order block, but there's another one inside of here, right? And price expands to take out an old high, right? So now, just like any concept, order blocks would not work 100% of the time. But what I'm helping you see is I'm helping you remove or think about the low probability order blocks, or think about order blocks that would not work, right? That's what I'm helping you see here. Right now, let's move to the second example. Right. So now what do we have here? We have a bearish order block. That one was a bullish order block. This is a bearish order block. So as you can see, up close candle here, expansion to the downside. That's exactly the checklist we talked about. That's what we want to see. Now, by seeing this, you already know you have an order block. You want to look through this expansion and find that there is an imbalance in here. Now, you would see that there's an imbalance here, right? There's an imbalance here also. Right? What imbalance do you want to think about? You want to think about the imbalance in premium, right? But that's not what we're thinking about. Order blocks now. We're not talking about fair value gaps here. But as price expands, you're waiting for price to return back into the order block, into the last zone, or into the last area where sell side distribution was being offered. It is inside of here that we had the most of the orders imputed for this sell side delivery. So when price is going to be returning back inside of here, it is a good and a fair price for distribution or redistribution of shorts. So like I said, it's a continuation play, because what we have done, or what we've started, or price already started that sell side move. All of this, one, is to influence buyers into this move, which will then later be wiped out, and also to take away short-minded sellers. Think about it. When individuals are inside of here and they have sales inside, and they've been selling inside of this move, and as price gets inside of here, they're excited, they have profits, but all of a sudden it starts to retrace higher. Now, the traders that probably would have moved their stop, they'll get stopped out. Probably they move their stops to this high, right? Because price is already moving in their favor. They get stopped out. Probably maybe they then change into buy side or whatnot, right? Or some would just, as price starts to move higher, just close trades. You have been in trades where, as you move price into, as price was moving your profits, you moved your stops to BE, you moved your stops to, or you moved your stops in profit, and then price return back to take your stops and still moved in your direction. You've been in trades like that. So this is exactly, those scenarios. So the order block is just a continuation play, it's a retracement play. Price is returning back into that fair price where distribution of orders or distributions of shorts were done, and where they're going to have, redistribution of shorts as price starts to return back into such ranges. Right, so that's what we're thinking about, right? So as you can see, this is a valid order block also. Now, is this a breaking market structure? Yes, we see price closing below an old low with this expansion inside of here. This is so important, because you can now not just think about this as an order block, but you already have confirmed the market structure shift. You've already confirmed that price is now bearish, ready to move. Right, so the moment you can confirm that price is ready to move, which is by understanding breaking market structure, and maybe in another video I'm going to look at breaking market structure full time, right? But the moment you can understand breaking market structure, simply when you're thinking about breaking market structure, you're looking for a close below an old low. Think about the bodies. As you can see here, the bodies close below these old lows. Now, the moment that is happening, I'm looking for price to return back into the range. Now, it returns back into the range, but it doesn't get to the other block. So my concept is not formed yet. I would have set a sell limit inside of here, stop loss up inside of here, and price then moves lower. Now, before we go into the charts to look for more examples, I want to give you some things to think about. When you are trading the order block, right, you want to be selling right as price gets into the order block, and your stop loss gets above the high of the order block. Now, the order block doesn't need to be one candle alone. It could be 2, 3 candles, right? And you're only going to understand this by going back into your charts and viewing these things. I'm going to show you some examples. So the invalidation of an order block is when price closes through the order block. So while trading the order block concept, what you're trying to do is your entry comes in as price gets into the order block, right? And your stop loss really just comes right above the order block. You can give it, 2, 3 pips just for allowance sake. Your brokers can be very, very crazy, right? So I hope you got something from this. Now, let's actually go into the charts and really just, explore. I'm a very practical guy. I like to, look at the charts a lot while I'm teaching, and it's all unscripted. It's all unscripted, right? It just gives you more and more perspective on what we're thinking about. Now, so this would have been, one order block that I would have waited for, right? This is one I would have, I was really even waiting for. I think I joined price somewhere inside of here, but I was really waiting for price to come back inside of this level to then be a buyer, right? Because it fulfills the checklist, right? As you can see, the order block is being formed from a fair value gap, right? That's the first thing. Breaks market structure, closes above old high very quickly, returns back into the discount, but in this case doesn't get. Now, this is one of those scenarios where your order block won't work, right? Where you would, have it plotted down, probably have your buy limit here, but price doesn't return back into it. And that's cool, right? It happens, right? What you want to be doing is you want to be trading exactly what you plan for. You don't want to be jumping into trades. You want to be trading exactly what, you want to see, exactly what the model is. Now, if you look at this, this is up close candle, run below sell side liquidity. Now, this run below sell side liquidity closes below an old low. That's a break in market structure. So the moment this is happening, well, I already have my order block playing out, right? Now, if you look just right above this, what you will find is there's a run above buy side liquidity also inside of here. So my order block is coming from a key level. The key level from here is called liquidity sweep, where price is running out an old high, right? Many of these concepts are still going to flesh out, but I hope you're getting what I'm saying, especially if you trade ICT or you've dabbled into, smart money concepts. You understand what I'm saying here. So this is a bearish order block, right? Price breaks sell side, returns back into the range, and what? Expands lower. So your trade idea is going to be something like this, right? Entry here, stop loss here, and boom. This is what you're looking at, right? And for 2 days straight, you're selling this, and it's all good and Gucci, right? So again, let's look for more order blocks, right? This is a bullish example. So as you can see from inside of here, price is dipping into this fair value gap, and from this fair value gap is where the order block forms. So it is formed from a key level. Then we have what? A displacement, right? This displacement is what? Breaking market structure, taking out an old high. That's a breaking market structure. Now, the moment I see that, right, now I already have another block to play with. Right, so I'm going to mark all of this out right before this move is coming out, because there's already breaking market structure. It's coming from a key level. There's a fair value gap inside of here. Very important that in the displacement, you want to seek for a fair value gap, because price would return. The fair value gap is like a magnet. Price always draws back to the fair value gap. Right, so there's a breaking market structure, price is returning back into this level. That's your valid order block right there playing out. Now, this is the example where I say, right, some individuals would look at this and say this is an order block. No. Why do I not want to be trading this as an order block? Because the range low and range, this is the range low, this is the range high, right? So this is the last range formed here, and this order block is right in the equilibrium part of the range. So this is not the order block that's going to send price higher. You want to be trading the order block at the extreme ends of the range, right? So you're buying this order block because it's right at the extreme of this range, not inside of the range. So you want to take note of this. You would see examples like this, and as you start to just make these adjustments, you start to get cleaner and cleaner with your order blocks, right? So this is a valid order block, right? Your entry comes right in here. Your stop loss comes right in here, right? And you can take exits here. Now, right, I could go ahead and show you so many examples. There's another one here, up close candle run on sell side liquidity, returns back, then expands. I could go ahead, but the truth is, no matter how much or how many other blocks I show you, you'd never be able to use them if you don't go back into your charts and prove them right to yourself. Right. So if order blocks are really going to work for you, one of the things that you're going to do is you're going to take this concept, you're going to take this checklist, and maybe you already use some of them and you don't use some of them, and you can go back in charts and back test it and see, oh, does this work? And as price plays out in the new week and you look at it, does it work, right? Does price respect these things? Are these things valid for order blocks? How many times do they work? If you don't put in that work, then nothing works. Honestly, there's so many concepts, and I'm going to teach you so many concepts and we move up ahead with this YouTube. But the truth is, if you don't go back to check and prove that these things work for you, like if you don't go back to see them for yourself, then you're still going to keep, failing and failing and missing on this concept, right? Because the truth is, it's not just about it working, it's about the confidence to see it through. And that's what many traders don't have. They don't have the confidence to see that trade idea through. They don't have the staying power because they did not do the work for the confirmation, or the confirmation for the concepts. They didn't do that work, right? They copied it from one mentor. So when price starts to gyrate very close to their stop loss, they close the trade. They're scared on the trade. They're not able to hold the trade as much as they should hold for, because they only just heard and watched the video about the concept and they just went on to trade it, rather than going back to say, oh, okay, is this another block? What was happening before the other block? When it got to this level, how did it then end? Right? Because you want to know exit protocols, which is something I'm going to talk about, in a part 2, at a later time for order blocks, right? What would be the exit point of an order block? Right? So, guys, I want you to go back and do the work. I hope you learned a thing or two from this video, and I'm going to catch you in the next one. Bless up and see you in the next video.